Hi everyone, today we're talking about if I buy IPOs in the stock market. Now this is where stock gets listed on the stock exchange for the first time, and they're definitely very volatile when that is happened. Quite often we see the stock price go up and down quite a few times, and even we see like the jump in the stock price go crazy, or it might just absolutely fall through the floor. But I'm going to talk about what I think about IPOs and when I invest in IPOs and IPOs that I have invested in before. So one thing that I always learn about IPOs is there's one rule that I have, and I actually learned this from another investor. They taught me this, and it's actually a rule that I've just kept going by since they taught me it. I thought it was a really good rule, and that is not to actually buy an IPO after 225 days of it being on the stock market. The reason why, because by then you kind of get all the people that just buy and sell IPOs as for a job, for a living, to make money. All them kind of people have pretty much gone out of that IPO by then, and we kind of get more of a stable price in the stock. So that's one massive rule, and a rule that I pass on to you is that 225 days is how long you wait. Now, a very interesting thing right now with IPOs at the current time that we're in, which has changed quite a bit. 80% of IPOs actually do not make profit at the moment, or when they're listed onto the stock exchange. So that's always something to take care of. Now personally, as you know, if you watch my videos quite a lot, I only really invest into companies that are making profit. There's only a few times where I have invested into companies that don't make profit for some reason, and that is just one rule that I have had. But one of the companies was an IPO, and it was about 225 days after its IPO that I invested into it, and that company didn't make profit. So I did break that rule on the investing not making a profit, but just something to be a little bit careful of. Companies that don't make profit always a little bit risky in my opinion. So the kind of past IPOs I've had is that I've invested into Ferrari, and I held that for a good 6 months, and I made a good profit off Ferrari. That was quite recent after its IPO. I felt like such a strong brand at a cheap price was a good bargain, and about 225 days after its IPO I did invest into Ferrari and hold the shares. Another one that I've invested in that was kind of recent was Alibaba, and Alibaba took a while for the stock market to trust it, being a Chinese stock, and after it consistently brought out revenues that were absolutely amazing, as it still does now, I waited for it, kind of like flatlined for ages, and eventually people started going, we're going to have to start buying this company because the fundamentals are so strong, and then that went up, and that's another stock that I've held. Obviously the same thing's kind of happening now with Alibaba, is because of the trade war. It's going down, but at some point the fundamentals of that company, when the trade war stops, that stock will go up, and people will trust that stock again. So it's kind of, Alibaba's done a full circle since its IPO now. The other one being Square. Square was I think very, very close to the 225 day rule, and it's a company that didn't make profit at the time, but it was forecast to make profit in a year's time, so it was kind of acceptable for me to invest in it, and I just saw the growth side of it. And I've come on this channel before. I bought in that stock at $20, and I sold out at $40, making double my money on that stock. Since then it's done really well. It's gone up to $100. It's actually been sold off, which I'm actually making a video about it later this week, about Square, about the stock and what's going on with it. But that was my other one. And kind of terms going forward about IPOs, there's not really many IPOs that I'm currently like watching. The two that I'm very watching, the only two I'm watching closely are, number one being Dropbox. I think that its potential in the cloud market is very interesting. I'm watching that closely because it's close to making profit, and as well as that, the growth side of it is pretty good, but it's going to have a lot of competition with all the other cloud kings out there, and it'll be interesting to see how much of the market it can take from them. So I'm watching that one. As a platform, I really like it, so yeah, I'm watching that one closely. So we'll see what happens with that one. And the other one is being Spotify Music. In my opinion, I think Spotify Music is better than Apple Music. In my opinion, it's the best in its sector for that kind of streaming music service. The only problem is that it's very far away from making profit. I think it's 2 years away off from making profit. So it's a stock that I probably would not invest in for another 2 years' time. But if it carries on growing at the revenue it is doing, and it gets to make a profit, then it could come a very interesting stock for me. The share price is a little bit expensive. I think it's about 150 per share right now, which is a little bit more than what I'd want to pay when you compare it to like Dropbox, which is like $20 a share. So I'd more than likely say Dropbox is the one that I'm watching more closely. And if I was to get into an IPO, that is the one that's looking most likely right now. But we'll see what happens. So guys, that's the video for today. Talk about IPOs. Give the video a like, subscribe, and I'll see you on the next video.